If you want to invest like Warren Buffett, you don't need to do anything extraordinary. In fact, many new investors are surprised at the uncomplicated investment style of the Oracle of Omaha. And while some of his strategies are very well known, others are, well, not so public. Nonetheless, what we know for sure is what we are going to discuss. So let's take a look at how you can invest following in Warren Buffett's footsteps. 8. Don't follow the wind. Another nugget from Warren Buffett that is essential for novice investors is that specific stocks shouldn't be bought just because everyone else is buying them. You shouldn't, however, set out to go against the grain and sell the stocks that everyone else is buying too. As Buffett has demonstrated over and over again, the best approach to investing is to entirely ignore common knowledge in favor of proactively spotting and seizing chances on your own. Additionally, temperament, not intelligence, is the most crucial characteristic for an investor. You should be able to do the most with a temperament that neither enjoys being with nor against the crowd. 7. Prioritize safety margins. Next, Buffett bases his investment approach on prioritizing a favorable safety margin, which protects shareholders against the possibility of suffering a monetary loss. For instance, there is a $5 margin of safety in the investment if a stock share is trading at $10 per share, but the firm's assets are actually worth $15 per share. It is reasonable to anticipate that the intrinsic value of the business's assets will prevent an excessive decline in stock price. Buffett also aims to pay less for every investment that the company is actually worth, and is of the view that a too high purchase price for the stock of an excellent company can undo the effects of a subsequent decade of favorable business developments. 6. Don't be terrified of market turbulences. Trading stocks appears to have the goal of buying low and selling high. However, human nature occasionally compels us to act in the complete opposite way. We start to feel like we should contribute some of our own funds to the endeavor after we see that all of our other pals are prospering. In addition, when the market crashes, we often sell our equities before they fall any further. Nonetheless, Buffett enjoys falling stock prices because they provide him with the chance to buy shares at a discount. This also explains why 2022 was such an active year. 5. Never fear selling. Converse to what we have just discussed, in an interview when he was asked about an investment he had chosen to sell at a loss, Buffett retorted that the most important thing to do while in a hole is to quit digging. That means that even if Buffett plans to keep each stock he buys for the rest of his life, attitudes shift over time. You might be surprised to learn that Warren Buffett invested a sizable amount of money in the mortgage company Freddie Mac, but when he came to the conclusion that, a few years prior to the start of the financial crisis, the lender's leadership had started to take unnecessary risks with the company's capital, he made the decision to sell. But guess what? The decision was right after all. 4. Examine and reflect. On number 4, we have examining and reflecting, or in simpler words, researching. Buffett typically spends a lot of time at his Omaha, Nebraska office, and his investors, who believe he is constantly on the go, are rather surprised by his calm, isolated lifestyle. He is reported to spend a lot of time almost every day just sitting and thinking. But what good does it do? Well, Buffett views knowledge as something that gets better with age, and according to him, accumulating as much financial knowledge as is physically possible has contributed significantly to his success. 3. Acquire knowledge of value investing. Value investing is a type of investment that emphasizes buying assets at prices that are less than their true value, and according to financial professionals, Warren Buffett is the world's best at this game. As we have discussed already, a value investor's main goal is to buy $100 worth of a company's shares for less than $100, preferably considerably less. Value investors seek out companies with intrinsic values that are significantly higher than the enterprise values reflected in the prices at which their stocks are traded and invest their capital in those companies. Value investors like Warren Buffett believe that eventually the market will recognize the true worth of an undervalued company, leading to an increase in the stock price and a profit for value investors. 2. Never neglect quality. Warren Buffett, as opposed to what may expect, does not discard his money. Rather, he rarely makes investments in bankrupt businesses, no matter how cheap they become. Buffett's advice to would-be investors: it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. 1. Make decisions for the long term. And last but not least, one of Warren Buffett's most important strategies for investment is thinking for the long term. According to the Oracle of Omaha, if you aren't willing to own a stock for 10 years, then don't even think about owning it for 10 minutes. Buffett doesn't just decide to buy the companies he invests in because he thinks their prices will increase this week, this month, or even this year. Buffett invests because he wants to continue owning the firms he has invested in for a long time. And even while he still routinely sells stocks for a variety of factors, he considers the majority of his assets as long-term investments. This brings us to the end of this video. If you like the video, please consider subscribing and sharing so we can keep bringing more content like this. See you next time.